Thursday, Anthony Special here with Special Analysis, unedited and on the edge of the market. Hope you're having a great week. Winding down, hump day has come and passed. Market has been quite volatile. We had this good run up. We've definitely had this pullback. It's been a little painful for a lot of positions. It is what it is. This is part of the game. You kind of have to soak it up. Today, I want to talk about, what's tweeting in the world, and that's Twitter. And obviously, Elon Musk, the world's wealthiest individual, has purchased about 9% equity share in this company, Twitter. So I want to look at the chart. We realize the headlines have been, hot on this, and that's all fine and well. But, the purpose becomes, that's great. How do we identify the opportunity? Where was the opportunity, if there was one, from a technical basis? Because none of us knew until the news told us that Elon Musk had made this purchase. And then, the market, gapped open, a huge gap that was untradeable. So you either had to kind of be in Twitter before, you had to have some interest in being long in Twitter before to take advantage of it. Now, full disclosure, I was not long Twitter before. Also, full disclosure, I hadn't even looked at the chart in quite a while. It just wasn't on my radar because it wasn't doing anything for quite some time. But I went back and I analyzed the chart simply to see, had I been monitoring Uber, where would I have bought it and what could have been my potential return. So that's what we're going to look at today. Of course, this is, again, all hypothetical because this is transpired prior. This has already transpired prior to me going back and doing an analysis. But the analysis never changes. It's always the same principle. Monthly, weekly, daily. We build structure after structure after structure. When a structure is broken, with the confirmation, we find a low risk entry, and the trade is always the same. So you'll see where I would have looked at Twitter had I been interested in buying it. So you could see, for the longest time, Twitter was in this fairly aggressive downtrend. This was a great shorting opportunity here. Came and went. But it was easily identifiable. So, taking a look here, basically what happened is price broke below this blue channel. We created a smaller channel, this teal channel around it, and when price had broken through the teal channel, that was the opportunity to buy. So how do we confirm this? I'm going to zoom in so that the candles are a little bit larger so you can kind of really see my approach here. So this is the structure we're looking at here, this teal line that my cursor is running up and down. This is our entry candle. This is the close of this candle, the settlement of this candle signifies the opportunity to buy this particular asset. How do we know that? So we go to our little measuring tool. We go to the channel structure, which you can see price reacted right to it. It failed at it the day before, and it succeeded at overcoming it the day after. So I measure from here to my candle close. My candle close gives me approximately 3%. So that exceeds my 1% confirmation. To me, that means this is a trade opportunity. What do I have to identify from here? First and foremost, I always have to know what my risk is. If I don't know what my risk is, I can't take a trade. So I go from where my entry point is, right about here, to right under the candle where the fight was lost. So I am risking roughly, let's call it 7%. The sellers remained in control in this candle. The buyers gained control in that candle. This is my area of indecision. This is where the bull and the bear fought it out, and somebody won. Obviously, the bull won. So this is my buying opportunity right here. That's my buy. That's my stop. So we know we're risking about 7%. What do we do now? What is our potential gain? So at the next candle, I measure the closest channel structure. So we're risking 7. We have a potential reward of about 23.5%. So it's a little more than 3 times. This strategy works really well. I'm comfortable taking a one-to-one as long as the one, the reward is greater than the risk at the entry. I'm perfectly fine with that. I don't need a multiple because this trade strategy does work more often than not. So with that being said, that's just my approach. Everyone should be unique in their trade planning, but that's mine. So 23% potential return on a 7% risk. We're clear. We understand that as time goes on, our target is descending, meaning as it continues to descend, that reward gets smaller and smaller and smaller. Now, not only do we have to take in consideration resistance, we have to take in consideration our 1% buffer. So when we know our resistance point, we want to subtract 1%. So what I did is, as this trade would have progressed, because like I said, full disclosure, I didn't take this trade. I didn't even identify before it happened, but I just did the analysis, and the analysis is what it is. Here's where my target would have been. But in this situation, price closed here, price opened here. So what does that offer you? Well, when you have a limit order, it's that price or better. So hypothetically, you woke up on April 4th, market opens 9:30 a.m. Eastern Standard Time, price gaps away, you just locked in 34.5%. Now listen, I was happy with 15%, because you could do 15% over and over and over again. You could be wildly successful. Compound some of those profits, you can make an absolute fortune. But the mere fact that this produced an opportunity to tag about 34.5% was really just incredible. But this is the way, if I was watching Twitter, if I was trading Twitter, had I done the analysis before the news hit the market, this is where I would have entered the market. This here area is where my criteria was met. And once that criteria was met, I knew, that I would have been perfectly happy making 15%. This was an anomaly. Does it happen sometimes? Yeah, absolutely. Listen, gaps can be the best thing in the world or the worst thing in the world, because it can gap below your stop, and your stop and risk becomes larger than you had anticipated. It's part of the deal. That's the risk that's involved in trading. But when you're lucky, when you're trading with the market, and something gaps away from, your limit order, you could be wildly successful. And I've had that happen a few times in my trading career. And every time it does, it's just like a gift from God. It's just a blessing in disguise. It's pretty awesome. So I just want to kind of break down the technique again. This is the technique we're going to use over and over and over again, whether it's a stock, future, forex, commodity, crypto, doesn't matter. The technique is always the same. The criteria and trade plan is always the same. Obviously, it just becomes applied differently to every different chart, an asset. So with that, again, I'll wrap up for today. That was kind of my spiel. I wanted to show you what I saw and show you how this would have transpired. Just a clean-cut trade. It's just another example of, applying discipline, applying consistency, applying a conservative approach, and you can do this repeatably. I mean, this week we've discussed Apple with a 5+% gain, Tesla with a 15+% gain. This stock, again, like I said, we didn't find this one prior to, but a 30-something plus percent gain. Again, if you can find these, set them up, and you'll do fine. Will you have some winners? Absolutely. Our Intel trade got knocked out. Our Nvidia trade looks like it's going to get knocked out. The Google trade is still in play, but it's not looking great because the market's rolled over. But we're going to do a progress report on that tomorrow, and I'll break down each one of them. So with that, I'll let you go for the day. I know I kind of rambled on a little bit, but I wanted to share this with you because this structure is the structuring of trading is extraordinarily powerful, and that's what I wish to share with you. So I wish you a beautiful and blessed day. Guys, if you enjoyed this video, if you found it valuable, if you learned something, please below, like, subscribe. Feel free to share on all of your social networking outlets. I would greatly appreciate it. I do all of this completely for free, and I will continue to as long as you guys are enjoying it and giving me the feedback that it is working for you. So again, have a great day. Have a blessed day. We will talk tomorrow. Tomorrow we'll be doing a progress report of a handful of trades we have looked at over the past week or so. So I look forward to doing that with you, and I will see you then.